Strap in, because what I'm about to tell you isn't just an economic update, it's a warning. A siren song echoing through the corridors of global finance, and yet, most people are still asleep, still sipping lattes and scrolling through headlines like everything is fine, but it's not fine, not even close. The economic chaos now unfolding in the United States is more than just turbulence, it's structural decay. We're witnessing the slow-motion unraveling of the very system that has underpinned global finance since World War II. And right now, it's the bond market that's exposing just how deep the rot goes. The Treasury Secretary himself, Scott Bessent, is waving the white flag. In a desperate bid to stop the hemorrhaging, he's trying to prop up the bond market without foreign investors, a US-only solution to a global crisis. Translation? He's preparing for a future in which the world no longer wants American debt. That's not just alarming, it's existential. Why is this such a big deal? Because the US government doesn't fund itself with magic, it survives on debt, on bonds. And for decades, those bonds were gobbled up by eager buyers around the world. China, Japan, Saudi Arabia, pension funds, sovereign wealth funds. They all trusted that US treasuries were safe, reliable, and above all, backed by the full faith and credit of the American government. But now, that faith is crumbling. Let's talk numbers. In just the first half of fiscal 2025, the US government has run a $1.3 trillion deficit. That's not the full year, just 6 months. And it's not a pandemic year. There's no war, no economic lockdown. This is just the new normal. Spend, borrow, repeat. Meanwhile, Treasury yields are exploding. The 10-year note is surging past 4.6%. The 30-year bond briefly kissed 5%, levels not seen in over a decade. But what's scarier than high yields, the reason behind them? Investors are dumping treasuries, liquidity is vanishing, everyone wants to sell, no one wants to buy. This is what a crisis of confidence looks like. And in response, Bessent wants to deregulate Wall Street. He wants to turn banks into the primary buyers of US debt. But here's the catch. Banks aren't charities. They don't buy risk for fun. They buy what makes sense. And right now, treasuries make 0 sense. Just ask Silicon Valley Bank. Remember them? They collapsed in 2023 because they loaded up on long-dated treasuries, thinking they were safe. When yields spiked, the value of those bonds plummeted and poof, SVB was gone, wiped out by what used to be the world's safest asset. Now Bessent wants banks to make the same mistake, but on a national scale. This is madness. And the Fed? They're watching all this from the sidelines, for now. But make no mistake, they're the final buyer. When this scheme collapses, and it will, the Fed will be forced to step in and buy trillions in bonds to keep the system afloat. That means more money printing, more debt monetization, more inflation. The United States is sleepwalking into the Japanification of its financial system, where the central bank becomes the buyer of everything. Government debt, corporate bonds, maybe even stocks. A zombified economy kept alive by artificial liquidity. But here's the twist. America isn't Japan. Japan runs a current account surplus. It owns more assets abroad than any other country. Its people save. Its culture tolerates austerity. The US is the opposite. It's a consumption machine running on fumes. No savings, no surplus, just debt, delusion, and denial. Now let's zoom out. Why are foreign investors walking away from US treasuries? Simple. Because the US government has become an unreliable partner. The trade war with China has reignited, and this time it's nuclear. Smartphones, chips, autos, you name it, it's getting hit with tariffs. The Commerce Department is slapping on penalties left and right. There's no coordination, no strategy, just chaos. One day exemptions are granted, the next they're revoked. It's policy via Twitter. No wonder foreign governments are backing off. Why would China keep buying treasuries from a country that's actively trying to dismantle its tech sector? Why would Japan destabilize its own yen to support a trade partner that's turning hostile? When your biggest creditors become your geopolitical adversaries, your currency is in trouble. Your debt is in trouble. Your empire is in trouble. Ray Dalio sees it. The legendary hedge fund titan is now openly comparing today's situation to the 1930s. Rising powers, protectionism, debt explosions, political polarization, currency wars. It's all there. And when Dalio speaks, markets listen. He's not just predicting a recession. He's warning of a monetary regime shift, a new world order, where the dollar is no longer king, where treasuries are no longer safe, where gold, commodities, and real assets become the new anchors of wealth. And speaking of gold, have you seen what it's doing? It's exploding. Up past $3,200 an ounce, on its way to $3,700, maybe $4,000. It doesn't care that the dollar's up, it doesn't care that stocks are green. Gold is on a mission, because it smells blood in the water. It sees the end of the US debt cycle, the final chapter of the post-1971 fiat experiment. And who's buying it? China. Chinese central banks, Chinese investors, Chinese billionaires, all hoarding gold like it's the last lifeboat on the Titanic. And they're not wrong, because gold has no counterparty risk. It doesn't default, it doesn't inflate, it doesn't care who wins elections or starts trade wars, it just sits there, quietly preserving wealth. Back in Washington, the panic is spreading. Bank of America is warning clients to sell S&P rallies. Goldman Sachs is lowering earnings expectations. Morgan Stanley is sounding alarms. Citi just downgraded more corporate profits than at any time in the last 3 years. Why? Because the tariff impact is now hitting the real economy. Supply chains are disrupted, input costs are soaring, consumers are getting squeezed, and the stock market, it's a house of mirrors, a rigged casino floating on fumes. Underneath it all, financial conditions are deteriorating, credit is tightening, M2 money supply is shrinking, banks aren't lending, capital is freezing, and when liquidity dries up, the weakest players fall first. Then the rest follow. What Besant is proposing isn't a solution, it's a Ponzi scheme, a shell game. We'll just get the banks to buy more debt, he says. But with what money? With what risk appetite? These are the same banks already cutting staff, slashing bonuses, and bracing for impact. And the ultimate irony? If they do agree to buy treasuries, it guarantees a crisis later. Because they'll be locking themselves into long-term bonds just as inflation comes roaring back. Just as the Fed is forced to reverse course and slash rates again, they'll be holding assets no one wants, again. Let's go back to fundamentals. The US has over $35 trillion in national debt. That's more than 120% of GDP. Every 1% rise in interest rates costs the government hundreds of billions in extra servicing costs. The math no longer works, and everyone knows it. Investors aren't stupid. They can see that the US is approaching the endgame. The part of the movie where the music stops, where the lights come on, where everyone realizes they're holding worthless paper. What happens then? Foreigners dump dollars. The Fed steps in. They print trillions to absorb the selling. Inflation explodes. Gold hits $5,000. Oil surges past $150. Food prices double. Riots break out. Confidence vanishes. And the dollar, it dies. Not overnight, not in a single crash, but slowly, steadily, then all at once. The question now is, can anything stop it? Can Washington pull back from the brink? Can the Fed find a soft landing? Can foreign buyers be lured back to the table? Maybe, but not with tariffs, not with trillion-dollar deficits, not with deregulation schemes that turn banks into cannon fodder. The only way out is through austerity, real spending cuts, real tax reform, real leadership, and that's something America hasn't seen in decades. So we return to the bond market. It's the heartbeat of the global economy. And right now, that heartbeat is erratic, the patient is crashing, and the doctors are out of ideas. Scott Bessant may be the face of this crisis, but the problem goes far deeper than him. It's systemic. It's embedded in every budget bill, every stimulus check, every reckless decision made in the name of short-term gain. This isn't just a financial story, it's a story about empire, the rise and fall of nations, the cycles that have defined history for 5,000 years. And in every one of those cycles, the pattern is the same. Debts rise, empires overextend, money gets printed, trust evaporates, gold reasserts itself, and the system resets. We are in the final act of that story. You can see it in the headlines, feel it in the markets, hear it in the nervous voices of Treasury officials and Fed governors. They know what's coming, they just don't know how to stop it. So, the next time someone tells you everything's fine, show them the bond market, show them the yields, show them the deficits, show them the gold chart, then ask them this. If everything's fine, why is everyone running? Let me know what you think in the comments. Will Bessant's plan work? Will the banks comply? Or is this the beginning of the end? Subscribe for more brutally honest breakdowns. Hit the like button if you're tired of financial lies. And remember, those who see the storm first are the ones who survive it, because the system is breaking, and no one is coming to save it.